This is Daniela Cambone, and I just had the pleasure of emceeing the Stansberry Conference and Alliance meeting in Las Vegas. It's our most successful conference for investors and Alliance members to date. All of the Stansberry editors were there propelling conversations forward alongside our keynote speakers, Mohammed Al-Arian and Grant Williams, and my longtime friend and goldbug, John Duty. The Stansberry Alliance Conference is an event I look forward to every year. And for a limited time, you have access to watch the live stream from last week's presentations with free ticker recommendations and panel conversations among the smartest analysts I know and more. So you still have time to be in the room with these folks and me by purchasing a live stream ticket. Visit DaniLivestream.com. That's Dani, D-A-N-I, livestream.com to gain access now. We hope you don't miss this chance. See you soon. Hi, this is Daniela Cambone, and welcome back to Stansberry Research and to my guest today who says, what a time to be alive. He compares it to the fall of Rome, but with Wi-Fi. Joining me today is Willem Middelkoop. He's the author of The Big Reset, and it's always a great day when he joins us. Willem, good to see you.
Great to be back. I think it was 5 months ago, and so much has happened. And well, actually, that quote came from a meme on Reddit. I used it, but it's
I love it.
mine.
Well, it definitely rings true. And we have a lot to discuss, Willem. For those at home, buckle up, get comfortable, sit back, because I'm telling you, this is going to be an episode for the ages. Willem, let's just start with your thoughts generally on where we are. You say that the crisis is really hitting the core right now. It's really hitting close to home. How do you see things today?
Yeah, I think it was around 2010 that I gave a presentation and telling the audience that around 2015, many problems would, well, all merge or would all emerge. And I think it took a few years longer, but now we're here and almost everything is falling apart. And I made a short list of crises. I sent you some notes yesterday.
Yes. And I just want to list them, before we go on. You like you said, you gave this presentation around 2010. You said we should likely see most of these crises unfold by 2015. A few years later, we're basically seeing all of them right now. You mentioned the energy crisis, climate crisis, COVID crisis, refugee crisis, monetary crisis, China crisis, which is a big one we'll get to later, the bond crisis, labor crisis, transport supply chain crisis, happening right now, and what you call the 800-pound gorilla. Do you want to say it?
Yeah, it's what I call the superinflation crisis. Don't talk about hyperinflation. Hyperinflation is very rare. We shouldn't use that word too much, although the CEO of Twitter warned for hyperinflation. But I think let's call it superinflation, inflation of 10% or more. And then because of this superinflation, we get a food crisis as well. This is very scary. Next, we'll have a food crisis because food is connected to energy. And we had the CEO of a large Norwegian company, a food company, or actually they produce fertilizers. And they warned that to produce fertilizers, which we need to grow food, the cost price of making this fertilizer, especially ammoniac, has grown by tenfold. It used to be $100 for one amount of fertilizer to produce, and now it's $1,000. So he's warning about a food crisis, which will be next. And China has been advising over 1 billion people to stock up food supplies. That's weird. That's scary.
Well, it's funny you say that, Willem, and resoundingly true. I was just basically doing a check on, Fresh Direct or Amazon the other day, and I saw bottles of water hard to get a hold of, Diet Coke hard to get a hold of, diapers starting to become hard to get a hold of. So the supply chain crisis is real. But bringing it back to your point about inflation, the Fed can't even hide it now. We had Fed Vice Chair Clarita coming out earlier this week saying, look, another year of inflation like this would not be a policy success. How concerned are they about the inflationary trap right now, Willem?
I think they feel trapped, and they are trapped. And one of the best signs of that was a tweet by a Dutch former central banker. And his name is Lex Hoogduin. I know him well. I interviewed him many times. I met him many times. And he tweeted last month that the ECB is trapped. And he's a former central banker. He's been running around in those circles for decades. And when the ECB is trapped, and of course they are, because they can't lower or they can't raise interest rates, what they would need to do to conquer the inflation, to combat the inflation, but they can't raise interest rates because there's so much debt out there. So, and when the ECB is trapped, the Fed is trapped as well, and the Bank of they're all trapped now, and they understand. And what's very telling, that the Bundesbank president, the German central bank president, he's leaving. We had the news yesterday, one of the New York Fed governors is leaving. So that's very telling, you know. It's getting scary, you know. We talked about this for years. I warned our audience for 20 years that one day we'll reach the point that you can't ignore this any longer. You know, this was laughed about. And now we're here. You can't ignore it any longer. I meet rich people every day. Every day. This morning, I met a guy. He sold his company, 40 million in cash. He doesn't know what to do.
Because he sees the warning signs. He wants to cash out early.
Well, yeah. He wanted to sell the companies to be flexible, but now he has a bank account with 40 million in cash.
Right. And that's something you said you're seeing a lot, people not wanting to get rid of their cash almost, and that's why alternative assets like gold, silver, and the cryptos have
everything. We were talking this morning about buying old historic cars or old paintings or whatever. You know, he needs to invest that cash, but he's already loaded on real estate. So real estate for many people, you know, they already have a lot of real estate. The cash is not an option. Bonds are not an option anymore. It's a guaranteed loss. So where can you go? You can only go to the stock market, but that's very rich valued. So we were discussing, what can you do with 40 million cash and still buy things which aren't that expensive? And then, of course, I was talking about commodities being at a 100-year low still. Many commodity companies are still valued at a 100-year low or near a 100-year low. The price earnings of commodity companies, gold miners, it is around between 5 and 15 compared to tech companies. When a tech company is trading at a PE, price earnings ratio of 25, we say it's cheap. I can give you examples of gold producers who have a price earnings ratio of 5. So there's still value to be found.
And that's why I like one of these quotes that you've said, when stocks keep rising, the smart people understand the value of money is declining, but the masses still don't get it.
So when all prices go up, when Bitcoin is hitting all-time highs every day, when stock exchanges are hitting all-time highs every day, when real estate is making records, you know, when prices of all major important assets keep rising, we're not getting richer. It means the money is getting, we're losing the purchasing power of money. It's the debasement of currency. It's a huge warning sign that money is dying. This is where, you know, some of the best books about the hyperinflation of Weimar Germany in the 1920s, it's when money dies. But this is very, very serious. And it's very hard to stop this. Once you get the spiral that people lose trust in cash and bonds and start moving their money to all the government can't print. Actually, we've been telling people, you know, for the last 10 years, buy all the government can't print. And now people are starting to do this worldwide. And that's very hard to stop.
To your point about superinflation, you say forget hyperinflation. When you speak of superinflation, what's the definition for you, Willem? It's inflation running at what rate?
at over 10% a year, but not the official inflation. The official inflation will show 4 or 5%. But as you might know, you have this guy of shadowstats.com. He's an old economist, and he's using the old model to calculate the inflation, the model from the 1980s, the official model. And when he uses this 1980 inflation model, he finds out that inflation with you guys in the US is 11, 12, 13% a year. So I think, look at the groceries. look what happens with cars. You see it everywhere, prices going up. Look what happens with stocks and real estate prices. They go up over 10, 15% every year. So that's what I call superinflation.
So how does the Fed, what options do you think they're looking at? What tools? They obviously now realize it's out of control. How do they stop it?
Well, you know, I'm the author of The Big Reset. I wrote that in 2014. And my core thesis is we need to find a new anchor for world's financial system, because we'll have a dollar crisis as well. We haven't even mentioned that. We need debt restructurings. But I also said we need a gold revaluation, because that's the trick the central bankers still have available. That's the card they still have in their sleeve, and they used that before. They used it in the 1930s. So all central banks in the world still own gold. They still have gold on the balance sheet. So when you revalue gold, you can reset your balance sheet for central banks. And that's why central banks will never use Bitcoin, because Bitcoin, they don't own Bitcoin. There's no use for central banks to start using Bitcoin, but there is a use to start using gold again. And by adding gold to the official, to reinstate the connection between fiat money and gold, they can bring trust back into the system. And that's what they will do in the end. And that's why I'm not afraid of hyperinflation, because central bankers know what to do next to avoid hyperinflation.
They don't know what to do with superinflation.
I think they hope to create normal inflation, 3-4%. But now, because we came from an era of deflation, we had this deflation problem actually for decades. So they tried to increase the inflation. That's what they also communicated. But it's very hard to try to increase the inflation a little bit, because there's a big risk that you will overshoot. It happened in the 70s. And once you start to overshoot and people start to panic, or rich investors, the high net worth, start to be concerned, and they start to buy everything the government can't print, then it's very hard to bring inflation under control again. One more example is very telling. I saw an interview with an American businessman who was producing lots of pizzas, a whole chain of pizza restaurants. He told the journalist he's buying 200 different ingredients for his pizza chain, 200 different. The prices went up of all these ingredients between 30 and 200% in the last 12 months. So that's superinflation. That's not 4%. That's not 10%. That's 20, 30% inflation for him.
We were talking offline saying how the Germans, fully get and understand inflation. What's the biggest lesson that the US should learn or take from Germany?
Well, I think the US never experienced hyperinflation. So that's a big risk, because once a country has experienced hyperinflation, let's say in the last 100 years, they're very, very concerned about that. And that explains why the German Bundesbank is always warning. That's why the Bundesbank president, I think, is leaving now. They understand the risk. Same goes for China. We haven't talked about that. China had hyperinflation between 1946 and 1949. And that was exactly the time when we had the Chinese Revolution. So the Chinese Communist Party could take control over to mainland China because of the hyperinflation, because of the chaos. And the ruler at that time, Chiang Kai-shek, he fled to Taiwan and took the gold with him. So that explains why China wants to take control again of Taiwan as well, because they used to be part. That, and China understands hyperinflation. Germany understands hyperinflation. The risk, is the worst which can happen to you as a country. Society will break down. And the US never experienced this. And the US thinks we're in control of the world reserve currency. There's no problem. We can finance ourselves.
It definitely feels that way. It feels that way. And Willem, don't you think that China obviously is looking at the US? They're preparing. Are they not going to use this as a peg to advance?
You know that my book was translated into Chinese. I've been to China quite a bit. It became very clear to me that the Chinese understand the American monetary situation very well. They studied world's financial system very well. I think China understands that the US is in decline and they're on the rise. And I was talking to you about 1949. Because that was the start of the of communist China, when they took over control. And I always hear that for the Chinese, they are working towards 2049 because that's the 100-year anniversary of their revolution. So they're building their power and their influence in the world for a long term. They don't want to take over the position of the dollar in the next 5 to 10 years. They're looking a few decades ahead, and they know the US is in decline.
Let's talk about all those phone calls we mentioned at the beginning that you're getting. People wanting to escape the banking system. I've spoken about it in past interviews. This is a trend that I'm seeing more and more. Loss of trust in the banking system and loss of trust in the dollar. In fiat.
Yeah.
People want ways out. Now, with the talk of inflation, obviously, this debate of whether gold is the ultimate inflation hedge has been reignited with people on both sides saying gold has failed as an inflation hedge over the years, while they're saying, no, it is the ultimate. Where do you fit?
Well, of course, gold has this history of over 2,000-3,000 years. And if you study history, gold always kept its purchasing power. There's no debasement of gold. And of course, you have cycles and you can buy gold at the wrong time and then you go down 40%. But if you look on a longer term, you'll never lose your purchasing power with physical gold. That has never happened before. And what we know from gold is being revalued once in a while, but it can take a few decades. We had such a period in the 1930s. We had such a revaluation period in the 1970s. We had one between 2000 and 2010. And I think we had a mid-cycle correction in the last few years. And now gold will restart this revaluation process. But we might wake up one day that central bankers choose to revalue gold to a much higher level, because that as said, that can help their balance sheet. But if you compare gold to Bitcoin, and I've been calling the Bitcoin digital gold since 2014, I was stupid enough not to buy Bitcoin. I only started in 2018, but I prefer Bitcoin next to gold because Bitcoin is the fastest horse in the race. It's a new horse. It's a young horse. It can run faster, but it shouldn't be a fight between gold and Bitcoin. It should be a fight between Bitcoin and fiat.
Right. Know? Like they're fighting the same fight, you're saying, gold and Bitcoin.
Yeah. They're friends, right. They're neighbors, right. They're nephews.
Different way to look at it. Interesting, because the argument I hear is, gold may have worked in the 1970s as an inflation hedge. That was great. But the Bitcoin is that hedge today.
No, but look, with gold is up over 30% since last year. Gold was trading $300 20 years ago when I started to invest in gold. So you keep your purchasing power. So gold is like an insurance for your net worth. But with Bitcoin, you can become rich And all, I was in the south of Spain last week visiting some real rich investors who are in our fund and wanted to meet me and play golf. It was very nice. But these guys all have too much money and too much time, and they're over 60 and 70. None of them is in Bitcoin. They don't understand it, but they don't need to, because they became rich by investing in companies, in real estate. But the younger generation, the younger generation can only become rich by investing in something like crypto now, which the old guys don't understand. So it's very it's very honest.
Why do you? That's an interesting. And by the way, I like how you said too much money, too much time. Isn't that a nice problem to have?
Yeah.
Why is there this philosophy, especially amongst the young, that they see crypto as the only, or meme stocks as the only way to get rich today? Is it because the corporate ladder philosophy is out the door, that cost of living is too high, that you can't just have a 9-to-5 job to become wealthy anymore?
I think there's a certain wisdom among the younger generation. They don't understand it themselves, but they feel it's the next big thing. And we, or I should speak for myself because you're much younger, but our generation of boomers, we don't feel it. We have to study it. Somebody has to explain it to us, and then we might try and step in a little bit. But the younger generation, they feel it naturally. You know, it's the sign of the times. It's the zeitgeist, like the Germans say it. You know, they feel it. You have the fourth turning. Every 20 years, you have this new generation which have different beliefs and which have different ideas. And we saw this in the 60s with the flower power. So it's a new generation, and they feel this is the right way.
So to that point, Willem, you know, for yourself, you know, obviously you have embraced the cryptos. You are someone from the gold realm, but have embraced the cryptos.
It was hard.
It was hard, but you got there. You got there. Is it just Bitcoin for you? I mean, you know, we hear the chatter, oh, you got to look at Shiba Inu. That's the next one. Cardano's the next one. How do you break it down? Are you open to the other cryptos? What's your philosophy?
Today, I wired $250,000 for an investment in a very unique fund, which is fully dedicated to DeFi, decentralized finance, which is connected to the most important venture capital funds in the US, who invest in the platforms which will be very disruptive to financial systems.
Can you name it?
No, I won't name it, because but we saw this huge changes, you know, with Uber and Airbnb, and they changed it. They changed a lot of things in very old business models. And when you look at the financial industry, the way we settle and clear stock trades, it takes 3 days. If you want to transfer money internationally, it takes 3 days. So you've got these bright guys now building platforms, and they say, hey, wait, guys, look, it can be done much smarter. We'll use blockchain. We'll use smarter systems. And that's what we call DeFi, decentralized finance. And I think this will be huge, because the financial system still operates like 100 years ago. The plumbing system of the financial system, like the clearing for stock trades, you have to wait 3 days.
Okay, and fair enough. I won't keep pestering you about what you invested in, but because the folks at home, our audience is equally mixed, crypto and mining precious metals. We mentioned the miners before. You say there's still a lot of value there to be found. Any insights? Okay, because obviously there's so many companies, just like the crypto world, there's so many companies you can choose. So what are the top 3 things someone should be looking at that's key for you? What are the metrics that you need to evaluate to know, hey, this one has potential?
We focus on small companies being responsible for large discoveries. So if you make a copper discovery now or a nickel discovery, you will do well. And we love to invest in companies who don't produce the metal. Because if you produce the metal, at the end of the year, you have less ounces in the ground left than at the start of the year. If you invest in an exploration company who's drilling and finding more, at the end of the year, you'll own more ounces in the ground than at the start of the year.
And you like the royalties, I assume?
Yeah, that's what we have as the safe part in our portfolio, because the valuations are a little bit higher if you look at Franco-Nevada and the Royal Golds, but they tend to be very safe, because the institutions like the pension funds, if they want to enter this mining industry, they almost only can buy the major producers and the royalty companies. And the royalty companies have such a wonderful business model. That's why they are loved by institutional investors. But their valuation is quite rich. Sometimes their valuation can be compared to the cheaper tech companies. But if you go to the smaller ones like Sandstorm, the valuation of Sandstorm is half the valuation of Franco-Nevada.
I want to bring it home with this. So for the folks at home who are looking at their bank accounts, looking at the fiat system, getting worried, right? If they're considering moving their assets outside of the bank, you know, what discussions should they be having with themselves? How do you know if you're ready to make that move? Because it can be scary, right? We've been accustomed to the banking system our whole lives. Like, what do you mean you don't have money in the bank, right? It's a scary shift.
Well, from a legal perspective, cash in the bank, you have a claim on the bank. So from a legal position, cash in the bank is risky, especially when we'll get bail-ins. If we get a next crisis and the financial system has to be, refinanced, you could have bail-ins like we've seen in Cyprus, and everything over 100K, you know, it could be gone. So I always advise people take money out of the system and invest it in things which are safe. If you invest money in real estate, the money's out of the system, the financial system, but it's in a very tangible, very, very safe asset. You can also take money out of the system by buying physical gold or silver and storing it in privately owned vaults. I started a company like that myself in 2008. But you can also buy Bitcoin, and Bitcoin, you can take your Bitcoin offline and put it in cold storage. So then your money is also out the normal structures, but there can be a risk because I expect more financial repression from the governments. I think the government one day might choose to close the on and off ramps to crypto, to Bitcoin, because there will be a huge fight between Bitcoin and the fiat system, especially once they roll out the central bank digital currencies. And so don't put all your eggs into one crypto basket. But I always have this model: it's 25% real estate, 25% in stocks, 25% in physical gold and silver, and then 25% there used to be cash, but now I put that in Bitcoin.
And I agree with you on that diversification front. It's just that Bitcoin maximalists would argue, well, why would you own AOL if you could just own Amazon?
Yeah, but when you get greedy and put all your eggs in one basket, you know, if you study history, what were the worst mistakes? People becoming greedy, putting all their eggs in one basket, and the basket then fell.
Good thoughts, and always a fantastic conversation with you, Willem. Come back anytime. I appreciate it.
Thank you so much, Daniel.
And thank you for tuning in to Stansberry Research. We'll have much more coming your way. That's it for me. Thanks for watching.